Hello and welcome back to the deep dive. Today, we're really getting into quite a balancing act happening in the UK economy. It's fascinating. Think of it like someone walking a tightrope. You've got this stubbornly high inflation, really pinching everyone's budgets on one side, and then, kind of strangely, a really strong pound on the other, even with all the global, turmoil. So let's set the scene. UK inflation is holding at 3.4% as of May. Food prices are a big part of that story. But the pound, it's climbed up to 1.3462 against the dollar. Seems odd with geopolitical tensions high, right? We're going to unpack this whole thing, try and connect the dots for you on what's really going on. So let's kick off with inflation. That 3.4% headline figure, it sounds stable enough, but if you peel back the layers, there's this real persistent pinch point. Food prices, they've jumped again. What's maybe the less obvious reason, the surprising factor pushing those food prices up right now?
Yeah, it's a mix of things, not just the usual suspects. Beyond the general supply chain stuff we've heard about, we're seeing quite specific impacts from conflicts like in Eastern Europe, hitting key agricultural exporters hard. And then you layer on top these severe weather shocks in South America affecting harvests, big deal for imports. And, closer to home, UK farming still has these ongoing seasonal labor shortages. It all adds up. These aren't just abstract economic points either. They directly hit the cost of putting food on your table.
Right, so we're talking basics, the things people buy every single week. Bread, milk. Can you give us a clearer idea what specific items are seeing the biggest hikes?
Absolutely. I mean, look at bread, it's up 6.8% compared to last year. Dairy, nearly 9%. And vegetables, they saw a really sharp jump, 7.2% just in May alone. And like you said, these aren't things you can just decide not to buy. They're fundamental.
Okay, and this is where it gets, well, a bit confusing, maybe. With all that pressure, food costing more, you'd sort of expect the pound to be struggling, but nope, it's climbed to 1.3462 against the dollar. What's propping it up? Where is this hidden strength coming from?
It's actually quite interesting. A lot of it is down to global unease, particularly the tensions in the Middle East. It's creating what economists call safe haven flows. Basically, investors get nervous and look for stability. And perhaps surprisingly to some, the UK is being perceived as offering that right now. Part of it is the view of the UK having sort of monetary conservatism, a reputation for stable economic management. Plus, our bond yields look relatively stable and attractive. And on top of that, the market thinks the Bank of England is likely going to hold interest rates until the autumn. That supports the currency too.
Ugh, the Bank of England. That's really key here, isn't it? Because people were talking about rate cuts maybe happening in the summer. Now everyone's saying autumn. It feels like they're playing a bit of a long game, maybe sacrificing some immediate relief for stability down the line. Is it just sticky inflation or something more?
Oh, it's definitely strategic. The Bank of England, they know that cutting rates too early could backfire. It risks weakening the pound, you see, and that would just pour fuel on the fire of imported inflation, especially for food and energy. So their priority has to be getting inflation expectations under control. Holding off gives them more data, more time to see how things unfold globally.
Okay, and thinking globally, those Middle East tensions you mentioned, they're not just background noise, are they? How do they directly feed into, say, our costs here and the currency markets beyond just making the UK look like a safe haven?
Well, look at oil prices. They shot up nearly 12% in just 2 weeks recently. And that immediately filters through. Higher transport costs, higher fertilizer costs for farming, and ultimately that means higher food prices, not just here, but globally. So for the UK, it really is a double-edged sword. Yes, the unease might attract some capital, boosting the pound, but we're also very exposed to these global shocks hitting food and energy costs in the real economy.
Right. So bringing it back home then, the big question for you listening right now, what does this actually mean for your household? 3.4% inflation, driven by surging food. What's the real impact?
Well, let's try and put some numbers on it. For an average family of four, the weekly grocery shop is probably costing around, say, 10 to 50 pounds more than this time last year. I imagine many listeners are feeling that, maybe wincing a bit at the checkout. Now, average wages, they are growing about 4.2% on average, but, and it's a big but, that growth isn't spread evenly, and for many people, it's just not keeping up with these essential price rises. And if you have a mortgage, you're likely just stuck in a holding pattern for now. Not much immediate relief expected there yet.
Okay. So, looking ahead then, let's say these trends continue, food prices stay high, global instability simmers on. What does that suggest for Q3 and Q4, for inflation and for the pound?
If things stay broadly as they are, we'll probably see inflation continue to fall, but very slowly, maybe down to around 3.0% by late summer. No sudden drops expected, the Bank of England. They'll likely cut rates, maybe once, possibly twice before the end of the year, but only when they feel really confident inflation is anchored. And the pound, it'll probably stay in that $1.33 to $1.37 range. So stronger than it was, but still bouncing around quite a bit depending on global events. Expect volatility.
Really fascinating insights. It paints a complex picture. So here's a thought to leave you with. While global crises might be positioning the UK pound as a financial safe haven on the charts, how does that square with your reality at home? How does the everyday impact of surging food costs and maybe wages not quite keeping up challenge that perception of stability for you? Something to mull over. Thank you so much for breaking all that down for us.
My pleasure.
And to you, our listeners, thanks for joining us for this deep dive. Keep exploring, keep asking questions. We'll catch you next time.